Welcome back to the show, Paul.
Hey, it's great to be here, Aisha. Thank you so much. I'm honored.
Wonderful. How are you today?
I'm doing great. Thanks.
Good. Glad to hear. So I hear that you are investing in RV parks. It's a new asset class for you. What opportunity did you see in the RV park space that motivated you to take a risk in investing in it?
Well, as an investor, I'm always looking for an asset class that's a little bit undiscovered. And what I mean is it's not cutting edge, the kind of thing that could succeed or fail, like, some technology things that come out of nowhere, then they fizzle later. On the other hand, it's not something that has been around so long that it's overheated. And, honestly, multifamily has gotten very overheated, and there's so many different operators have just rushed into the space that sometimes it's hard to get a deal because
Absolutely.
sometimes you'll end up on the wrong end of a deal, as some multifamily people have found out this year. But RV ownership has skyrocketed 62% since 2001. This is a growing trend. And what's happened is, of course, we all wondered 2 years ago about how COVID would impact or potentially destroy the world. And, what happened is five times as many RV campers joined, five times as many RV campers started camping in 2020 as the previous record year, which was 2019. And so, what a surprise to all of us. And so basically what happened is, in a number of ways, two ways I'll jump back into in a few minutes, COVID accelerated a trend that was already on the rise anyway. And that's what I think is so great about the timing of this, but there's a lot of other stuff.
Do you see in the future, the projection, say 5 years, is this a growing market? Is it anticipated to grow?
Yeah, it's funny. So the between 2019 and 2020, 6 million households started camping. Yet, and 26% of those were, 26% of all campers were new during the pandemic. But pandemics are temporary things, at least we hope they are. So the question is, why would it continue? Why am I so bullish on it since the pandemic height of that has passed? Well, something happened that's a first in world history, and we all know what that is. Work from home went from, I think it increased something like 400%, if I'm not mistaken,
Mhm.
between 2010 and 2020. But since 2020, since COVID, it's obviously exploded, and it's a first in world history. And what it's caused is, that and a lot of other factors, including the wealth that people have, the mobility they have in general, the millennials' idea of a good time. People are now, the demand for RVs has increased dramatically. In fact, there's only about 11 million RVs by one count in the US. Studies show that 9 million more households or people want to buy an RV in just the next 5 years. And even though that's impossible because they can only produce about 600 to 650,000 a year, there's
Wow.
massive pressure on RV parks as a result of this. And so, think about this. The work, again, the work from home or the remote work revolution has, first of all, allowed, something like 35% of people to be on the road full time, or to, not be in the office, I should say, full time. And a lot of those people, now that RV parks are equipped with internet and, Wi-Fi and better cell service and better amenities in general, they're realizing, we're not, COVID taught a lot of us, life is more than work. Life is short. Life, we're not guaranteed, 100 years. And so a lot of people just started realizing, hey, I want to work from the road. I've got kids. I'm going to homeschool them. They realize they can homeschool. Some people did. And so they're hitting the road. Like my friend who was a CEO of a startup, and he hit the road. He rented his house in Roanoke, Virginia, and he hit the road full time in a very nicely outfitted camper that has a garage mode and a work mode where he can have a desk drop down from the ceiling and he can work. Two people can work there. And
Wow.
so it's just a really, really powerful time. But what this has done is put a lot of pressure on RV parks because you've got a lot more people using a lot more campers in, I won't say the same number of spaces because they can start new RV parks, but it's just really, really put a lot of pressure on the RV park industry, and something people really didn't expect that came out of nowhere.
And when you say pressure, pressure meaning to meet supply with the demand pressure to build new ones, what do you mean by pressure?
I'd say both. I mean, here's something that's really interesting. There's a website called Outdoorsy and another one called RV Share. And these websites allow people to turn their RV into a rolling rental unit, sort of like Airbnb for RVs. And so as a result, these RVs that on average sit idle 350 days a year, Aisha, now they might go into service, let's say another 30 days a year or 50 days a year or 150 days a year. Well, think about that. Same number of RVs now getting 5 times the use. I'm not saying all of them, but some of them are. And so those people need a place to camp. In fact, I stayed in an RV park when we were checking out this asset class. I stayed in one of their permanent cabins. But when I wanted to go rent one on RV Share or Outdoorsy, I didn't know where I could take it because my neighbor with a huge Winnebago next door told me that it takes a year or two to get a nice camping space at a campground now, which is really sad. So it's putting pressure on RV park development and on the current RV parks, which are honestly, a lot of them are significantly overbooked.
And what can you talk about what your experience has been with RV parks in terms of investing in them?
Yeah, well, there are there may be three, but we know of two large public REITs that invest in RV parks, campgrounds, and also mobile home parks and other asset classes. And so they have a lot of assets and they're really professionally run. And then you've got about 8,000 privately owned RV parks. And the
And
vast majority are considered, what's that?
are these mom and pop operators?
Yeah, I was going to say the vast majority are mom and pop operators. Mom and pop operators can be great, but they often don't have the desire or the resources or the knowledge to really upgrade their park, to really run it at optimal potential, and really maximize income and therefore value. And so the RV parks we've invested in have been the type where our acquisition partner would buy, let's say, a $3 to $4 million RV park. Let's say it had, just as an example, 100 spaces. And they would go in and buy the land. They had the money. They were well capitalized. They'd buy 100 acres, let's say, of wooded or farmland next door. And they would take that same core asset that's already got a website, or at least they build one for it. They've already got marketing. They've already got a front desk. They've already got all the services in place. And now they can double the capacity, as an example, by adding spaces. And they also add a lot of amenities. So, for example, the one I stayed in near Fort Worth, Texas, added a $2 million water park and also a $600,000 swimming lake and a fishing pond and, Wibbits. Are you familiar with Wibbits?
No, what is a Wibbit?
Wibbit is a floating obstacle course. They're about $200,000 or $300,000 to install in a lake. And kids and adults can play on these obstacle courses, and they charge about $15 to $18 per hour, and that's about $1,000 total at per hour in the peak months, especially in the summer. And so, as a result of that, there's so many value adds. I mean, I could list 20 value adds real quick, but I mean, there are things like a makeshift drive-in movie theater and human foosball and a safe jump park or a trampoline. outdoor trampolines, face painting, gold, gem mining, hay rides,
That's
music, food, limited food service, all kinds of things like that. And if they put a park like that near a destination, like let's say Branson, Missouri, or Nashville or Gatlinburg, people can come there and have their whole vacation. They might stay for a week or weeks in an RV. And studies show that it's 47% cheaper to have an RV vacation than a similar hotel vacation if by car, and it's over 60% cheaper if going by plane.
Well, I've never stayed in an RV park, and I always thought of them as just these barren campsites that people would roll in their vehicles
Yeah.
and hang out.
Yeah. It's really amazing. Some of these are full vacations in themselves. I mean, here's an example. One of the ones we invested in had a $3 or $4 million acquisition price and a total capital expense, including the purchase and the upgrades, of over $17 million.
We can expect high ROIs from investing in them.
Well, we project high ROIs. There's no way to tell for sure. And as we know, little disclaimer, past performance and projections don't prove that it'll happen in the future. But my compliance people like me to say that. But it is, we have very, very high hopes for the income and the appreciation. It takes a while to get up and running with something like that. I mean, you're going from a small RV park to almost like an amusement park. So it takes, hundreds of employees to get it up and running, and it takes some time. But once that time passes, if these trends continue, we have very high expectations.
So that was your strategy. You value added it to be like an amusement park. Am I hearing you correct with your own investments?
Yeah, and just to be clear, my company doesn't do that, but we invest with investment partners who do the heavy lifting. They're the experts.
Of course. Okay. And how has the current inflationary market, how is that affecting RV park investing?
Yeah, so I was really concerned earlier this year when gasoline prices shot up. I was really concerned that it might impact RV parks, and it might impact RV travel. But I was surprised. My Toyota Sequoia, I'm not proud of it, but it gets 12 or 13 miles a gallon in the city, and it gets 17 tops on the highway. That's not much worse than motorhomes. Class A motorhomes get 7 to 13 miles per gallon. I mean, I thought they'd get I'm talking about the huge Winnebago or whatever. I thought they'd get like 3 miles a gallon. Class B gets 18 to 25 miles per gallon. That's as good as my car, better than my Toyota Sequoia. And Class C get 14 to 18 miles per gallon, which is almost exactly the same as my Sequoia, slightly better. So it's not as bad as I thought in that regard, the gas prices and all that. But inflation, I mean, let's face it, it costs a lot of money to go to an amusement park today. I mean, all in for a family to go to Disney or places like that, it's an enormous amount of money. And families are finding they can have just as much fun sometimes at an RV park, and sometimes mom or dad can work while the kids are having a blast, and they can all have a great evening together.
So say we found an RV park and we wanted to invest in one. How do we know one is a good deal? What criteria do we look at?
Yeah, that is actually something I don't have a beat on. I could talk about that for self-storage or mobile home parks. RV parks are, again, kind of new on our radar, and I'd have to ask my operating partner on that. I think that they're looking for places that are within 1 to 2.5 hours from major metropolitan area. So we invested in one in Leesburg, Alabama, that sounds like it's out in the sticks, but it's actually within a few hours of Atlanta and several other major cities. And so we invested in another one near Branson, Missouri. And of course, most people know that Branson, Missouri is a family vacation spot in itself. And so those are some of the things we're looking for. But where I'm not an expert, I'll be really honest, is there are 3 or 4 other types of RV parks. One is just a travel park, probably what you're thinking, an overnight park. People just stop on the way somewhere else. A second kind is an extended stay type where people build a deck around their RV and it sits there for, years or even decades. Another one is workforce housing, and we ran into that in North Dakota during the Bakken oil boom when we did multifamily there over a decade ago. And then the fourth type is destination RV parks, and that's all we really invest in. I wouldn't know how to invest in the others. It's just not something we've done.
Okay, so is one better than the other question? We don't have an answer for that just now. Okay.
I would, here's what I don't like about RV park investing. There's a few things. Mobile home parks are almost impossible to replicate. I'm not saying they're impossible. They're very, very hard to replicate. We love mobile home parks. We invest in a lot of them, but it's not going to be like a competitor is going to pop up down the street. RV parks are often in remote locations where land is cheap and a competitor could pop up down the street. Well, if that's the case, first of all, that probably is a good location if the competitor's smart and going into all the effort of building one. But second, I want to have a huge competitive advantage. If I put $17 million into originally a $3 million RV park, it's going to be very, very hard for someone to compete with us. And that's what I like about the destination RV park model. That's why we chose that one at least first.
Okay. And are there any mistakes that can be avoided, risks that come with it?
Yeah, I think assuming, that if you build it, they will come. I mean, my son has a lot of land here around southwestern Virginia, near the Blue Ridge Parkway, near some of the great, hiking Appalachian Trail and all that. And I was kind of like, hey, you've got all this land. There's this huge demand of RVs. If you build it, and then I started to say they'll come, but you know what? I don't think that's necessarily true because the marketing for these things has gone way up as well. And so I don't think he can just build it and expect people will show up. I think that would be a mistake. I think you need to do marketing. You need to get your RV sites on a website, on some of these national reseller websites like, hotels.com and Airbnb have for Airbnb and hotels. Well, there's stuff out there for RV parks as well. So I think it would be a mistake just to build and hope people show up.
Okay. So we need a marketing budget and we need to run it like a business.
Absolutely.
Absolutely. All right. Well, let's change topics for a little bit. Well, first of all, before we do that, any advice you'd want to give to someone looking to consider RV parks as an investment? Based on what you just went through, your own experience?
I would say go buy Brian Burke's book, which is called The Hands-Off Investor, and take the principles he talks about for multifamily investing in his 300 painfully meaty pages and apply them to RV park investing. Try to look with the same rigor and try to find a place to invest. I would only invest with a professional because a terrible operator or a newbie can sometimes ruin the best asset, and a fantastic operator can turn a terrible asset around. And so I would really focus on finding the right operator. Excellent.
Now, let's change topics for a little bit, a topic that I'm excited about. You've got a book that you're working on Warren Buffett and value investing and real estate. I'd love for you to talk to us about that.
Yeah, great. Well, I'm doing this book because I've learned a whole lot from Warren Buffett and Charlie Munger and Howard Marks, some of the value investing greats. And I thought, these principles really translate well to real estate. And so Buffett's most famous saying is possibly about to be time to look at again more closely. And that is, be greedy when others are fearful and fearful when others are greedy. And, Buffett, he bought Goldman Sachs and Bank of America stock when nobody else would touch him with a 39.5-foot pole back in 2008 and 9. And of course, he made a lot of money doing things like that. So, you don't want to make foolish decisions. You don't want to, invest in something that's clearly on the way out, but he's looking for durable assets that will, really stand the test of time. And in real estate, I think that it's possible that we could experience some pain and carnage in the near future. Well, if you've got cash reserves, investors, if you have a smart strategy, the best time, Howard Marks, who wrote Mastering the Market Cycle, said the best of deals are made in the worst of times, and the worst of deals are made in the best of times. So for real estate investors, I'd say try to figure out where we are in the market cycle and figure out if it's time to be greedy or if it's time to be fearful. I can tell you it's likely going to be a time to be greedy in the near future.
Absolutely.
Another one of his sayings is this, we know the saying, the rising tide has lifted all boats. That's certainly been true in real estate for the last decade plus. But Buffett adds this. He says, only when the tide goes out do you discover who's been swimming naked. And, I don't want to invest with skinny dippers. I figure you don't either. The rising tide has caused all kinds of new people to come in, people that were just in junior high school during the 2008 downturn. There's nothing wrong with being in junior high school in 2008. My point is, if people are giving them millions and tens of millions of dollars now and calling them experts, well, it's possible, not always, but often you'll see that those folks make rookie mistakes. And I don't want to see that happen to anybody, but if it does, I don't want to be on the wrong side of that. And so Buffett says, he reminds us that the best time to figure out a great investor or a great syndicator is during a downturn. The best time is not while everything's going north, because while everything's going north, these folks have often taken great risks, and those risks pay off when everything's going north. But if those things just go stagnant or go down a little, those same huge risks, like high leverage, for example, and floating debt, can sometimes be the thing that takes that investment, right down through the floor and possibly turns into a huge loss. And we think, in fact, we actually already know that that's happening in this current interest rate environment.
Yeah, we're starting to see some shifting going on right now. Absolutely. And then is there one more piece of wisdom that you learned from Warren Buffett before we wrap up?
Absolutely. Buffett said, price is what you pay, value is what you get. There's this thing called the efficient market hypothesis, and it says that every stock, everything is priced exactly where it should be. Well, Buffett loves that theory. He would love to help schools like the Chicago School of Finance and others teach that more and more, because he said he's made billions from the fact that people believe that. Because he says, while it's generally true for those who are willing to dig in and find intrinsic value, they can actually, make a huge profit. Did you know if Berkshire Hathaway's price dropped 99%, it would still beat the S&P 500 in the last 55 or so years? It's amazing. Well, basically, Buffett is talking about finding value, pulling and extracting intrinsic value where others don't see it. And we, our goal is to do the same thing in mobile home parks, self-storage, RV parks, and other asset classes that our Wellings funds invest in. And so we love extracting intrinsic value. And sometimes that comes in the form of buying an asset that's terribly mismanaged, or buying an asset that's under-marketed, or buying an asset where, unfortunately, the founders passed away and the kids are, bumbling it and just want to get rid of it. Things like that. We bought an asset, we invested in a self-storage asset that had 80% delinquency. If you can imagine that, it was managed that badly. And
Wow.
That's very easy to turn around in self-storage. And our operating partner was able to turn that around and make a massive profit for himself and his investors in a fairly short time. And again, I'll say that doesn't mean he'll do it again, full disclosure, but he has had a tendency to do so.
Fantastic. Well, we are, I'm looking forward to your book. We'll have to have you back on another episode so we can go deeper into it and discuss Warren Buffett and its relationship to real estate. Thank you very much, Paul. I'm so glad to see you again. And our listeners were very well informed with the RV park
All right.
information shared.
Thank you so much, Aisha. It was great to be here.
Likewise.